All right, I think we're live now. We'll start the webinar. Let's get this started. I think I timed it pretty good this time. Timing the YouTube live and the Zoom live at the same time. We'll see how well I actually did when we look at the replay, but I feel like I did a good job this time. There's always a delay usually.
Or maybe it's
yeah. Okay, so people are starting to enter from the waiting room. I'll give a few minutes for that. Welcome, everybody. So if you're coming in and you're settled, give me a quick note. Make sure that you can see the screen share. Just confirm for me that you can do that, that you can see that in the chat. Say like yes or good or something like that. If you can hear me even. Yes, okay, thank you.
all right.
Welcome, everybody. Okay, so I'm assuming that you're raising your hand to indicate that you can see me and the screen. That's what that means. Okay, I'm just gonna lower everyone's hand now because it makes it look like you have a question. Okay, perfect. I think we have most of our usual group here. Welcome, everybody. As you may have noticed on our screen share, we have a special guest today, Randy Tate, our very own co-founder and CEO. He doesn't usually make an appearance on these AI circles, but we have a special appearance by Randy today. Today marks episode 3 of our AI circle. And like I said, we have a special announcement, but we'll get to our usual market update and a little bit of a product update as well. But before that, I'm going to hand the stage over to Randy for a very special announcement. So Randy, take it away.
Thanks, Aaron. Appreciate it. Welcome, everybody. Super happy to be here.
Actually, one second. Let me unshare so that everyone can see you first. So give me 1 second. Let me stop the share. Perfect. Go ahead.
All right. I'll go ahead now. So yeah, welcome everybody. Thanks, Aaron. Thanks, Kelly. Great to pop on here and be part of this. But one of the things that I wanted to jump on here and make an announcement into this group first is that many people get, AI is an awesome thing. We all know that from an investment perspective, we've got the best mechanism on the planet. As we've been talking though and learning from our clients and what do you guys want to hear? What do you want to know next? What do you want? People want to learn more about the actual fundamentals of the market itself, about how the trading works. So we all sat down, we talked about it. And so what we're going to do is, and some of you might have already heard of this a little bit, we are going to have an event in Dallas. It's going to be live. It's going to be in person. And Aaron's going to give you a lot more details about some of the cool things that you guys are going to get access to that everybody else doesn't. And what we've done is we've put together a program that's going to take everybody from the brand new beginner all the way to a seasoned veteran, expert, professional trader. We're going to have something for everybody. The event's called Mastering the Markets. AI is one component of it. Obviously, it's the component we love the most, but we want to bring more to the audience, more to our people, and we want to expose our technology and our offering into other communities that do things like Forex or futures, or maybe they're just an options group and people like that. And this is one of the ways we're going to expand it. Now, there's a couple of things you're going to learn. You're going to learn the fundamentals and a deep dive in 3 specific areas: futures, Forex, and options. You're also going to learn about hedge funds. What is a hedge fund? How does it work? Why would I want to be in a hedge fund, or do I want my money in this software? What do I want to do that? It's the next level of money rules around the markets. And we are super excited to do it. It's going to be in Dallas, Texas, October 20 and 21. We're only opening it up to 200 seats. And Aaron's going to have a little special deal here for you guys later where you can, for free, you can be able to enter into a raffle. You might get free tickets to the event. You might get your hotel paid. You might even, heck, you might even get dinner with Kelly. Who knows? There's going to be a lot of good stuff. We're super excited about it. We're also going to talk about how to participate in the market and some tax strategies around it, how to minimize the tax consequences to gains. People tell me all the time, Randy, I don't want to pay capital gains, so I'd rather just stay in the market. Well, if you'd have stayed in the market to avoid capital gains over the past year, since January, you wouldn't be real happy. You'd been better off selling, paying the dang capital gains than absorbing the loss. It's little things like that. We've got tax experts. We've got futures experts. We've got Forex experts. We got options experts. And we've got all of that. And our keynote is going to be none other than Jeff Hazlett. Jeff Hazlett is a former, he was one of the hosts on Bloomberg Television about the markets. He's the current chairman of the C-Suite Network. He's flying in to give a big keynote that night about the state of the markets, about us. And of course, you'll get a little bit of me and Kelly all wove into the middle, along with some hedge fund information as well. It's going to be a jam-packed 2 days. You do not want to miss it. And because you guys are pretty much first, because we haven't let the other groups start marketing yet, you're also going to get some discounts. You know, since we're hosting the event, we figure our people should have first dibs to buy it at a discount. But you'll get all that from Aaron. So that said, October 2021, mark it off your calendar. Plan on being in Dallas, Texas. Come hang out with us. Come spend 2 days. Learn some of the tricks of the trade and how mastering the markets actually happens. So Aaron, Kelly, thanks for letting me jump in and do a little public service announcement here on your time. And everybody, thanks for having me on here. And Kelly, take it away. Aaron, it's all you guys.
Awesome.
Thank you,
okay,
Randy.
so a couple of things about. Let me just briefly describe what the raffle is and what the giveaway is. Give me a second to share my screen here, because I have to share my screen in a very finicky way. Okay, you guys see that? Hopefully, give me a thumbs up or a yes in the.
It's not full screen though,
camera.
Aaron. I can only see it over your Zoom thing. You need
It's
to
not
max
full
it
screen.
screen. It's not.
It's full screen to me.
Okay, then maybe it's me.
Okay. Perfect. Okay. Awesome. Thank you. Thank you, Tony. Thank you, McKay. So here, very simple raffle rules. First of all, I'm legally obligated to tell you that this is in no way affiliated or sponsored by YouTube itself, right? Because this is a live YouTube video. But the rules are you have to like this, so be a subscriber to the iFlip YouTube channel, which hopefully everyone here already is. The second step is to like this video that you're looking at right now. And then the third step is to leave a comment below. Now, what constitutes a comment? A comment about what would you like to see at the event, right? We're early enough right now, it's July, and we have about 3 months before, 2.5 months before the event, and we're still able to squeeze in some requested content, right? We are going to talk about futures, options, and futures, Forex futures and options heavily. So if you have any questions or requests about that, we can squeeze that in. If you have a testimonial or a story you'd like to share about how iFlip saved you a ton of money this year, just as a side note, fun fact, iFlip in its totality has saved its customer over $2.5 million this year with its AI, right? Just simply by being out of the S&P since January, 2.5 million. That's nothing to sneeze at. So fun fact there for everybody. So maybe you have a story similar to that. You can leave any kind of comment or question you have about the AI software. Any of the above counts as a valid comment for a valid entry. Okay, but you must like the video. We're able to track whether or not you like the video and are a subscriber. So if you leave any of those steps out, you're not going to qualify. So make sure you fulfill all 3 requirements here. Now, what do you get? Well, Randy actually alluded to this. You could get a free ticket if you don't already have a free ticket, or rather, if you didn't already purchase a ticket, which we're going to talk about in a minute. Then we'll get you a free ticket to the event. But if you've already purchased a ticket, which I'm going to assume a lot of people are going to do after the promo we're giving away at the end here, then what do what happens? Do you just get another ticket, or what happens there? Well, we're going to enhance the bonus for people who have already purchased a ticket. If you already have a ticket bought and you win the raffle, we will book your the 2 nights that you would need for the hotel. That's on us. That's on iFlip. And in addition, we'll throw in a one-on-one dinner with Kelly, where you can pick his brain about what's happening in the markets, the AI software, maybe some of the speakers that you had listened to. That alone is worth, in my opinion, thousands, by the way, right? I've seen things like that go for way more than just the ticket price here. So that's a special deal. So you actually get a better deal if you purchase the ticket first and then win the raffle, whereas if you don't purchase first, you just get the ticket, right? You don't get the hotel or the dinner with Kelly. So there is also a method that you can enter twice, double your entries, because we're also running a similar contest on Facebook. Now, I'm not going to talk about that contest here. I'm going to actually talk about it on Facebook, because the rules and guidelines and all that kind of stuff is a little bit different. All right. And the requirements are a little bit different. Okay. So that sums up the raffle. I'm going to pause for a minute here before we get into market updates with Kelly for anybody that has questions about this. I feel like I kept it pretty simple, but if you have any questions, just throw them in the chat real quick or save them for later. Give a minute for people to do that. Otherwise,
We could go.
we can go. Okay. I guess that was pretty simple. No questions. All right, Kelly.
All right, Aaron.
Oh, no, wait. Before I hand it over to you, I have to do the legal stuff. Almost forgot with all the fun that we were having. Okay, so bear with me as I go through the disclosures here. Disclaimer: iFlip Investor Incorporated and iFlip Financial Services are not financial advisors and do not make, buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk. You should speak with your CPA or financial representative to ensure that the iFlip smartfolios that you select are suitable for your investment profile before trading in a live brokerage account. With that being said, I'm going to stop the screen share and hand it over to you, Kelly.
Thank you so
want
much,
to share
Aaron.
your screen.
Okay, yes, please. And by the way, everybody, remember, any opinions I express on this is also my own. So that means, because I do offer sometimes an opinion and they are just mine. All right, do we have the ability for share? Host disabled, I need you to.
Oh, I'm sorry. Here, let me allow that. Okay.
All right, share screen. I'll share this screen here. Boom.
Yes, and a very special thank you to Tony, who linked the URL to the iFlip YouTube channel in the Zoom chat here. Once again, reminder, everybody, after October, this AI Circle show will no longer be available on Zoom. It'll only be available on the social media platforms. Right now, it's YouTube. We're looking at expanding it to Facebook and LinkedIn and stuff like that, but one step at a time. Okay? Sorry, Kelly, take it away.
All right, everybody. Hey, by the way, thank you very much for tuning in this Wednesday late afternoon and early evening. I think everybody might have noticed today we had a pretty significant rally near the area of around 1.9% on the S&P, a whopping 4% today on the NASDAQ. Take a look at this. Here's the day in the NASDAQ. Here's the day on the S&P 500 Spider. But let me caveat today's rally. Today's rally occurred, if you haven't heard the news, for two reasons. One, Jerome Powell, the Fed, although they raised rates 0.75%, that was widely expected. That had no impact on the market. What did have impact on the market is when Fed Chairman Powell chatted after the release of the hike in interest rates. And what Powell said, I think is very important to note, is that he is going to take future sessions with the FOMC to say if they should raise rates further from here. And that market interpreted that today is to say, hey, maybe that's the end of interest rate hikes. And therefore they rallied the market, and the NASDAQ in particular, because the NASDAQ is more closely associated with interest rates. In years past, interest rates didn't really have the effect on the NASDAQ because they were all generally very high in free cash flow, and large corporations like that do not need to borrow. Today's world has changed. Interest rates changed buyers' behavior plans and the ability for other companies in a B2B world be able to do advertising through giant social networks like Apple or Facebook, Google, et cetera. But at the end of the day, because Fed Chairman Powell said that they will take future interest rates rising on the quarter by quarter basis, month to month basis, they feel that, hey, maybe that's the end of the interest rate hikes. And so we had this rally here on the S&P 500. Sorry, this is the S&P 500. And by the way, take a look at this rally here on the NASDAQ going back to it. Now, although this rally was impressive, for example, in the NASDAQ being up around 4.5%, which is a huge move, if you really look at it, it really put us back at where we were last Friday. That's all it put us back to. And if you look at where we were at the beginning of 2020, the beginning of the year, we're still down significantly, literally 100 points or 25% on the NASDAQ. But it has made an 8% rally from these lows down here to this point here. Generally, moves like this are followed with some follow through. And I suspect from a charting basis, before I get into the AI interpretation of these things are normally followed by a little continuation as mutual funds adjust their books at the end of the month, which, by the way, is now. We are T-2 for the end of July. July looks clearly that it's going to be a very good month, up in the neighborhood of about 5%. So very good month. However, it doesn't detract from the fact that it's down still 25% on the year. And if we go to the S&P 500, it's a very similar approach. But you'll see some damage here that tells me this is nothing more than yet another a bull rally and a bear market. Here's why. Again, the S&P is down right around now about 15% on the year. We were down about 23.6% at our low point at the end of June. And for July, we're up about 5.5% here. But as you can see, this rally is nowhere near the rally we had the last time when they thought the lows were in. And all it took was 3 days. 3 days in June destroyed a rally that took literally 2 weeks to unfold. Just 3 days. The same thing is what I expect to see within the coming weeks or sometime in August. Another move lower. Nothing has changed except for the language, the bully pit that the Federal Reserve uses to be able to talk the markets higher. At the end of the day, inflation is still here. They are behind the curve. They are trying to talk their way out of it, hoping that they don't have to raise rates any further. The bottom line is, this is what a person named Arthur Miller, I'm trying to figure out his name. It was during the Carter administration. I remember it is when I first came into Arthur Burns, sorry, folks, who did this before he was fired by Jimmy Carter and replaced with Paul Volcker. He did the same thing, thinking he could raise rates just a little bit to be able to tame inflation. He was way behind the curve. Volcker came in when interest rates were about 2.5% on the Fed funds and raised them all the way to 20% to pull down inflation. We have raised rates 1.5% to be 1.5%. And Jerome Powell feels that that might be enough. He's already been behind the curve. He was already wrong about inflation being transitory. I feel he is wrong again. And I think most market participants feel the same way. And if we look deeper into the markets, you'll see that really the damage is very deep. Let's look at Walmart. Now, everybody kind of knows that Walmart the other day had bad earnings and that their margins were lower. So yesterday, Walmart sold off around 9%. Today, because of the interest rate move, look at what they did. They rallied back Walmart just halfway. It was a huge rally for Walmart. But at the end of the day, it only put Walmart really where it's been trading for the last 3 months, down in here. This is not a stock that has bottomed. So it is pulled back because of the excitement of the day, a cash pour in before the end of the month. And that is significant as mutual funds adjust their books at the end of a month. Let's look at another stock, Google. Where are Google? Let me find it. My eyes are down the toilet these days. Here we go. Look at the rally we had in Google today. But Google, on the other same point, since May, is really just in a trading range. It is more back and forth for a large cap triple Q stock that represents 16% of the triple Q. 16%. Look at, let's look at another stock, a banking stock like Bank of America up here. This, to me, folks, doesn't look like much of a rally. If interest rates were going to go much higher, we would see, if or much lower or move anywhere significantly, we would expect the banking stocks to do much better than they have. And look at the banking stocks this year are down literally 35% on just Bank of America. And the same thing is marginally true on JP Morgan as well. Let's look at ExxonMobil. ExxonMobil, as you can see, oil prices are still just under $100 a barrel. ExxonMobil made a nice move today back up. However, if ExxonMobil continues to do well, which I suspect it will, it'll go back up towards the $100 range or so. This is not boding well for inflation and for all the general stock market as a whole. So ExxonMobil actually looks very good, given that the price of oil has come down 20% from 120 to about 100. And so that to me tells me from a technical basis, I don't really like the overall market. I do kind of like ExxonMobil here, however, but that's not an indication of the market, because as the market has gone down all year, ExxonMobil has gone up. Let's take a look at Amazon. Now, again, here's another stock that from the beginning of the year, right over here, was at 168. And even though the price split 20 times, we're still at 120. We're down $48. It's still down 33%. And it has had and it was down quite a bit more. As you can see, it was down as much as 70%. So it's cut its loss, not in half, but very close to that. It is still down 34%. And by the way, notice on all of these charts, another interesting thing is a feature. All it's doing is moving back out of what we call a fat tail. These blue lines are just simple standard deviations on a 200-day moving average, a very common measurement that most people look at, and I am one of them. And all it's doing is working off some excess, maybe oversold conditions. But when you come up into areas like this, these generally are areas to sell a market, not to buy it. And if you can, as you can see, if we look at almost everything, even including the S&P 500, there it is, right at the second standard deviation band, which puts it almost in its area of normalcy. Take a look at the triple Q. Same thing. Take a look at Bank of America. Almost not even close to the same thing. One of the things that tells me that that's how weak the overall market is. Amazon, lo and behold, the same thing. Apple, maybe a little bit better. Apple's already coming up almost to its 200-day moving average, and it's only down about 180 down to 156. It's only down maybe 20, 30 points out of 180, about approximately 28% on the year. And that's the best looking one of them all. This here is a definite feel. I feel this is definite sell at this area of 158. I will sell it personally at this area to go short. Even though we can't go short in our product, it is overall a market that I think is run out of the steam that it had in the beginning of July. And notice this is the beginning of the third quarter, folks. So they're starting it off with a bang, but I think we'll end the quarter out with a bust. So generally when these rallies get going, people want to be enthusiastic. There's a lot of potholes and danger out there. Let's look a little closer again, like we did the last time, moving on to interest rates. Now, interest rates on the long end have moved down. Most people recognize that the mortgage market, for example, went from about 3% mortgages on a 30-year all the way up to about 5.4% on a 30-year mortgage. But that was down here. The market has since pulled back, and interest rates, and this here represents a 30-year bond, have fallen back as much as 50 basis points on the long end. What does that mean? It means the yield curve is inverted, because guess what? A 2-year note is yielding just literally about 3% as well. And the yield curve is totally inverted. When a yield curve inverts, it does signify a recession. Whether we're in one or not makes no difference. The problem is that we have an inverted yield curve, and we also have something also very unique, a dollar that is as strong as it's ever been historically. As far back as I remember, until in the early 90s, it was around the same price. This graph doesn't go back that far, but I can tell you that if we look, for example, at a euro currency, we can't even go back that far unless I go to a monthly chart. Let me show you, everybody, because this is significant. Here we go. We're going all the way back to 1994 on a monthly chart. In the beginning of 2000, the dollar was at its all-time high, around 88. Sorry, the euro was at its. Sorry, this is not the dollar. Let me see if I can get the dollar. This is important. Here we go. This goes all the way back to the 70s. But as you can see, we are nearing the highs of the millennia. Look at it here, where we are. This is telling you, everybody, that the currency, the US dollar, is extremely strong, which means it's great if we travel overseas to Europe or Japan. However, it's really bad for people to travel to America if you're from Europe. And what's worse is if they want to buy American goods, they're extremely expensive. That cuts off our exports. That is inflationary. Remember, that is inflationary. So a strong dollar is generally a good thing, but if it's too strong, it cuts off the ability for the country to export its goods. And that means that the dollar will actually end up hurting us as the reserve, as using it as our reserve currency for the world. It hurts our economy if it gets too strong. And right now we're there. We are there. This is the strongest I've seen the dollar since I was literally on the street. And as you can see, it was just a little stronger at that time. Remember last time when we all talked about the yen, everybody? Let's take a look at that. Well, the last time we were talking about the yen, it was right around here. Well, it's now going even higher. The yen is falling apart. What is this? This is because we are finding out that literally the Bank of Japan literally owns 50%. They have bought 50% of their own debt. This is a George Soros moment. So there is a brew here, and remember we talked about it. There is a play here, but the problem of making the play is logistically there's issues. And the other issue is that it's almost something hard to stop. Because once a country owns most of its own bonds, literally the bank owns the most of the bonds, not the people, that means there's no liquidity. And the bank is in a really hard place. There will be a time in the future where where the currency will drop significantly. This is a play, again, for large funds. And I'm still looking at how to best create some situations for flip users to participate in a trade within our platform. So the jury's not out. The market is still going the way we expect, but there's going to be a time within the, by the end of the year that we might have an opportunity and we could put that out and create a portfolio around it. So that's something we will do. Let's take another final look at Bitcoin. Well, Bitcoin, given what's happened to the market and had a rally, it has had a rally. It starts to look good in here because we have had a rally in July. However, I'm going to move this back to a daily chart. However, this jury is still out. My instinct is, and this is just my opinion, as everybody would know, I think this looks to me a lot more attractive than the stock market. This is something where in the old days for Kelly, for everybody, I would put the trade on to buy Bitcoin and I would only sell it if it broke down below these lows around 18,000 or lower, which means we're betting about $4,200 on a 2,200. We're betting 20% that it could go down. If it goes down 20%, we take our loss. However, the upside of this literally could be about 50% to around 31,000 area, which is where it broke from. In other words, it could recover to here, this area. And that's about the 31,000 level, 30,500. So there goes, that's my expectation of Bitcoin. So at the end of the day, interest rates, I feel are still going to go higher on the long end as the third quarter unfolds. I think oil will probably go higher as the quarter unfolds. And just as to let everybody know about the AI is still in a holding pattern. The data suggests, something I looked at recently, is that the M2 money supply, as we all know, is finally starting to come down. Well, that means it's less ability to get credit. We also have found that credit, available credit to people is at all-time highs, which means more people are spending money on their credit cards to pay their bills. It's because of inflation. These are things, given with higher interest rates, given with the inflationary environment caused by the energy sector, these are not things to go buy the market and think we've put in a bottom. There's plenty of pundits out there that feel that the bottom is in, and then it just makes a new bottom. So I think we can chalk July up tomorrow, or by Friday, and say that was the end of the month. It would be a good month, even if it falls a little lower from here. But the end of one month inside of a quarter doesn't mean anything. And I look for August and August and September to be lower. And on that note, I'm willing to take any questions if anybody has any.
Thanks, Kelly. We've been getting some questions. I have to field questions from both YouTube and Zoom at the moment. I'm doing the best that I can. So feel free right now, at least until October, until we switch over completely, feel free to type in your questions in either platform, whichever one is comfortable for you, because I have my eye on both of them. But I know Kelly and Randy, you're only going to see the Zoom. So I'll read you the questions we get from YouTube.
If you don't have any questions just yet, let me just extrapolate a little further on how the AI looks at stuff like this.
Absolutely. Go ahead.
So everybody understands something that's kind of critical. AI essentially is looking at a combination of fundamental data. I've already alluded to it. Interest rates, credit card debt, credit card defaults, credit card expansion. Those are three different things. We look closely at that. We also look at some information of price, but it's not really price that's the driver inside of the AI component of how we develop signals for us to get in and out of stocks inside your portfolio. So an algorithm generally looks at price data and makes decisions based on technical indicators. For example, lows on a chart like we have here. It'll look at these lows and see how long it's been out above these lows. And it'll say that is an indicator. The longer it's above a low, the higher the indicator becomes, and it becomes more significant. AI, on the other hand, is just looking at the raw data, fundamental data, against the information of price data. So that's what AI does. Algorithms, they generally just always look at simple price data. And they look at the data, like I mentioned, about the lows. So there is a difference. Right now, the thing keeping us out of the market is the absolutely bad information that is coming out fundamentally. Nothing has changed from yesterday to today because the interest rates got hiked another 3 quarters. Nothing has changed in terms of the verbiage of the Federal Reserve. They've always tried to talk a market higher. They don't talk markets lower. And that's what Powell did today. He did it last time too, and he got the same result. He talks it higher. But as the reality sets in, as the fundamental data continues to come out poorly on overall economic indicators, literally from recession indicators, GDP indicators, commodity price indicators, at the end of the day, the raw fundamental data is in the negative, and the AI sees it, and it so far hasn't seen any anomaly, any kind of event that tells it to say we should make a change of decision and give the information back. In other words, the decision-making power back to the algorithm to say, algorithm, get a clients into the market. Nothing has changed. Outside of the price has gone up a little bit over the month of July. That's it. I'm going to move to a gold chart. By the way, gold has done nothing, as you can see, except go down. No value to owning gold as an inflationary hedge, it appears.
And can you expand on that a little bit, Kelly? I'm actually curious myself. In other areas of, economic crisis, kind of like what we're going through now, gold has usually held up, right? Is this kind of an anomaly for gold?
I don't think anymore. And again, I think we've explained this over other AI circle meetings. Gold literally has lost its glitter.
Okay.
It is no longer assumed the appetite of investors that are seeking safe refuge. Investors nowadays are looking for other alternatives to do it, something that will provide them some form of income. And so gold gives you no income. And at some level, it's a decaying asset, especially if interest rates are higher. So back in 1980, when gold rallied because interest rates went higher, it was at that time to think that your currency wasn't worth anything, so we'll use gold as the currency. Mm-hmm. And if you remember, gold ultimately in years past was a currency. It is no longer that. Also, I feel the younger generation doesn't look at gold as anything other than something you wear on a ring or have on a chain. So it is no longer the store of value it was. And we can see that literally by looking at the price. It's also very heavy, folks. It's heavy. So it's not something you really could use as a store of value. And if you look at silver market, we're making new lows. Mm. There's no fungibility between gold and silver. These things are the inflation hedges of times gone by.
All right. And we covered that for those of you who can remember as far back as January and February when we did the crypto masterclass. We talked about the portability of something to be considered a very usable, valid currency. And that's where, all these precious metals, that's where they really kind of lose its portability value, right? So Kelly, we do have a couple of questions. I'm going to try and organize them and consolidate them the best that I can. And then we have a bunch of product questions that I'll handle afterwards regarding the crypto release. So Pamela Dare asks, have you seen this headline? She linked an article. I don't believe that you've read it, but basically it's 1,600 of the brightest minds, scientific minds on the planet saying crypto and blockchain is a sham. What are your thoughts on this? Again, this is just your opinion. Gotta clarify that.
I get it. Look, I think what we've seen when we go to the crypto markets and how they've fallen apart as a result of the stock market going down, that you can make the argument that the crypto market is a function of a rallying stock market. In other words, a rallying stock market gives people consumer confidence. And we now know consumer confidence has gone way down. It used to be 128, it's now 98, which goes into a bear territory, anything below 100. And what this is telling you is that when people have high confidence that their wealth will increase, which is generally through the stock market and real estate markets, when one of those markets starts to decay, they no longer have the confidence and they're less willing to make outside bets. It's very easy to take bigger bets into things when you know you're making money in other places. Your house is going up in value, your stock portfolio is going up in value. A lot of people might say they take more vacations or they buy a second house, or they buy, maybe it looks like they bought crypto. I'm thinking, well, and hey, that's going up too. And they caught a wave, they went up. But as soon as the market started to stumble and peter over like it has this year, they have totally taken the wind out of their least liquid asset, which is the crypto market. And that's why the crypto market, we say it's highly correlated. It's because what they did is they felt, well, that's my excess cash, the things I was betting on, I'm going to get out of that. And they use that first to get out, to be able to raise capital and raise funds. But however, even though there's large community that doesn't believe in it, the reason crypto is valuable is a different reason that I think most people feel. And having not read the article, I feel that the crypto market is the future of a worldwide currency market. And I think it has become so established, especially in the Cadillac cryptos, which are Litecoin, Bitcoin, and Ethereum, that you can't take it away. Yes, it'll go down in value. 70% moves down are highly probable. But here's also a market that has the ability to have 200% gains, and we've seen that already many times. So as soon as the market starts to level off at a lower level, which I think will be a lower level in the stock market and also in the housing markets in the many months to come, that you'll start to see the crypto markets will hang in here, maybe a little bit lower. And then maybe within a couple of years, you're going to see the crypto markets go up 200 or 300%. In other words, they will return to their highs. It is not over. And the naysayers in a down market are just coming out of the woods, and they're pointing at that we should have known better, that there's no real store of value. It's just something created for millennials. There's no future to it. I disagree. It makes all kinds of things easier on a worldwide basis for exchanging imports and exports. That's why I'm a believer in it. And that's why you have to buy this technically and or find some way to own this, because it is something that will give you a huge store of value in the future. And yes, it's going to have these bumps now, and it'll have more bumps in the future. It's just navigating something that is not going to go away ever.
Right. And just to add on to that a little bit, again, going back to our crypto masterclass, if you ask the average person, they'll believe heavily. They'll put a lot of faith in the US dollar, which is the world's reserve currency, but the dollar isn't actually backed by anything, right? It's what we call a fiat currency. And not to scare anybody here, but historically speaking, all fiat currencies eventually go to zero. So what does that tell you about the dollar? So a lot of people who are pro crypto use that as their kind of foundation to be like, hey, when the US dollar goes to zero, you want to diversify, you want to have something, right? There's a lot of that happening. And also from a technology perspective, go ahead, Kelly.
Well, I see where you're going, and I will read the article because I read most articles on these kind of things. And again, it's not like I'm married to, in my particular case, I'm not married to anything. Look, stocks, commodities, cryptocurrencies, FX, these are all things we date people. We don't marry. We date them. We might have long dates with them. We might have short dates, but it's a dating game. It is not marriage.
Right.
We buy things, and we buy things because we feel they will appreciate in value. We sell things because we no longer like them, or we feel directly that they will depreciate in value. So when we look at cryptocurrencies, we look at it as a mechanism to make money inside of a portfolio or all by itself by owning them and not owning them, owning them and not owning them. Every bit the same as owning AT&T or ExxonMobil or Google. We look at it the same way. I look at it the same way. For example, I believe that Apple will make new highs one day. So you could buy Apple here and you'll probably be happy in a few years. But you might be able to buy Apple later this year at a much better price, and you'll be even happier in a few years. I feel the same thing with cryptocurrencies. The reason I like Apple is because I feel it is a leader in its industry. The reason I will like Bitcoin is because I feel it is a leader in terms of the cryptocurrency market. It has the greatest NAV value, the net asset value, of any other cryptocurrency. I also believe that when you own things, you try to own Cadillacs. That's why you try to buy things that everybody knows, that have deep liquidity. They're things that are most likely to move and appreciate and depreciate in known ways. That's why we don't need to look for the new stock that comes out. So for example, to give you an idea, look at Cathie Wood's ARK funds. She was the person that was buying all kinds of stocks that nobody heard of, because she felt at that many years ago that these are the stocks that will lead technology into a new future in the years to come. And lo and behold, it was up around 200%. Now, of course, it's down 75 to 82%. And guess what? It's not rallying. In other words, even though the market's gone up, the ARK funds haven't done that well, given that the other technology stocks have. In other words, another way of saying it is the stocks that she felt were going to be the leaders, many of them have gone bankrupt. So therefore, her vision of a good set of stocks that will represent the future is already proven to be flawed, just like Bitcoin. If you look at her fund, it behaved a lot like Bitcoin. So would you say that all the stocks that she bought were bad and all people would say it's bad? I would say no, it's not the case. Many of them were. The same thing is true of Bitcoin and cryptocurrencies. Many of those cryptocurrencies, I feel, will not exist in the future, but some of them will. And Bitcoin, Ethereum, Litecoin, those will be the ones that last. And so the best way to appreciate and move and bet on things is to stick with the best known things inside of a group of things that are similar.
Right.
And that's why we do that. We're not trying to outsmart the market. We're just trying to participate with its ebbs and its flows.
Right. So there you have it, everyone. I like to keep things simple personally. And right now is a time of great fear in general in the markets. And usually think human nature. When people are scared of something or they're anxious or whatever, you say all kinds of stuff. You get to believe in all kinds of stuff. Doubt can be very, very powerful and pervasive and insidious in a lot of ways. So take what you read, especially right now, with a grain of salt. I love the way that you put it, Kelly. We're dating crypto. We're not marrying to crypto. Although you'll find a lot of on the internet out there. What's that meme? HODL. right? Hold on for dear life, right? That is absolutely not our attitude in how we invest our own capital, right? We want to get in, buy low, sell high. It's the simplest thing, right? And we use AI to do it, right? Because it's hard to do by ourselves.
It's always about mechanisms. Again, this is exactly what I think a lot of investors are fearful of. When do I get in? When do I get out?
Right.
A lot of people would say, if we go to the S&P 500, and let's face it, folks, the S&P 500 kind of tells it all. It would have been nice to buy, we might have thought it was nice to buy the S&P 500 somewhere in this area here. And then when you get this rally up, you feel vindicated by it. Because guess what? Now I can say, hey, I can risk these lows. And I have a defined level of risk. Well, these lows got taken out in 3 days. No one could have got out of most of these things because look at the way they gapped. Unless you're trading futures, you just had no chance. So a lot of now we can look and see, hey, we know the price is here. We could say, boy, it would have been nice if we bought somewhere in here. Why wasn't the AI smart enough to buy here? Well, we might say that in a month later, prices could be down here and we wouldn't think that was so good and we would be chopped up. I would rather have the market go up to 440 all the way up here and stay around here for a while for me to get into the market and feel better about it. At least then, hey, the market dropped only 10%, and then we sidestepped that 10% because we would have been down as much as 23%. But hey, we sidestepped it and we bought it 10% lower rather than hold on to it from here. Because a lot of people that are in the market, they're here and they're just hoping that this market does what it did today and continues to do so to close the year flat or even higher. And the problem is they're just hoping. And the reason we trade with these mechanisms is to say hope is not a bet. Hope is not a strategy. That makes no sense. We're using mathematics. Mathematics rule the day at the end of the day. So in the long run, and the long run is not until we die, but in the long run, which is really generally between a year or two, the idea of sidestepping these kind of moves is all we have to do. So if we only sidestep half of the 23% decline, and then the market can continue to rally from there, we've done much, much better than everyone else. That's why I have no concern about a 5-6% rally from its lows on data that, by the way, hasn't even changed at all. All it is talk. And so I can't buy talk. If anything, I sell talk.
Thank you. Thanks, Kelly. I love that. And if for those of you that trade yourself, you should probably recognize what Kelly's talking about is patience is often the difference between a trader that goes broke and a very successful trader. Just that one.
And also patience when you're flat the market, it's easier to be patient. It's very difficult to be patient if we were already down, 23% at one time and maybe 16% now. It's
Absolutely.
much easier to be patient when you have your money in cash or largely cash, because you're frightened. Even anybody would be frightened if you see your retirement or your assets go down by 23% religiously. There wasn't like in one day. This is a time when most people feel, oh, I could have sold the market here. I could have sold the market here. I could have sold the market here. I could have done it before. And each time it rallies, a lot of people that are in the market and holding on, they'll think a month from now, they might think, oh, I should have sold it today on this day. And that's what'll happen. And therefore they're operating emotionally. And when you're down, you get emotional. That's why people that gamble have a lot of trouble. A disciplined gambler knows when to walk away.
Right.
A bad gambler is a person that says, I got to make it back. I got to make it back.
All right. Thanks, Kelly. Let's move on to the next question, which is a little bit of a product question. So I might ask for Randy to chime in here just a little bit. Several of you are asking about the AI crypto smartfolios, or when is crypto going to be rolled out? And Randy, do you want to comment?
Yeah, I'll gladly address that. The crypto is done on our end. It's done and it's working well. You might remember seeing an email a few weeks ago from Trade Pro, our introducing broker. The way the money has to flow and everything does, we have to have an introducing broker. Well, the reason you got that email is because we are moving from Trade Pro to Zinvest because their compliance won't let us trade crypto. So we are getting that move done right now. Now all brand new accounts are going through the proper channel. They're getting set up through Zinvest. And by next week, hopefully early next week, but by next week, you'll be receiving an email with a little button to click that will just say it's a change of terms and conditions. It's not changing anything. You're not getting charged for trades. Nothing is changing except the back end introduction mechanism of the money to the markets. That's all it is. We are, believe me, going insane about the crypto ourselves. I'm throwing probably bigger fits than any of you. And literally, I feel like a little kid throwing a tantrum. But the reality of it is, on a good note, it's by the time we're up and running with it in the next few weeks, that means it's going to be probably the time maybe the AI will buy. Right now, the AI would have you out anyways. So knock on wood, we're in a good spot not to buy. So, you know, Aaron, I knew that was going to come tonight. I knew I was sticking around to make sure I could answer that question. It is extremely frustrating. For those of you that have been with us for a while,
Sorry, folks.
Kelly's over there making futures trades.
Yeah.
For those of you
you, Kelly,
stuck with us, when we do turn it on, we will have a gift for you. Not going to ruin it, not going to spoil it, but we will have a gift for you when we turn it on because of your patience. We really, really appreciate it.
Yeah.
And we are also, that is also one thing I forgot to mention at the event. The event is going to have some crypto experts, literally from around the world, that are flying in to speak on all things digital currency, cryptos, different forms of NFTs. When we say the markets, master the markets, we mean all of them. We know you're not all going to jump into every single type of trading ever. That's not the idea. The idea is to educate you on what's out there, the way it works, so that you're not uninformed when you get into conversations. We want you to be able to be informed in the conversations when people talk to you. So yes, Aaron, thank you for bringing that up. Thank you for whoever asked. The crypto is working wonderfully on our end. The software works great. They just won't let us turn it on.
Right.
And so we can't do anything about that. It's a compliance thing. It's a legal thing. And that's what prompted the whole move to Zinvest in the first place. So I hope that answers it. If you got any other questions, you guys all have my information as well. You can all reach out at any time. I'm looking at the people on here. I know most of you.
Thanks for sticking around, Randy. Good instinct on thinking that was going to come up. Yeah. I think that it was kind of a blessing in disguise in a way, because the crypto market has been tanking, right? So it wouldn't have affected your bottom line as an investor anyway. But I can tell you, as the product manager, I can tell you for certain, we were ready in April. We sent all of our code. We had our APIs done. We were like, all right, Velox, we're ready to turn on the switch. And they said, wait. And then we're like, why? And then all that is what Randy has been talking about.
Randy's been fighting with it too, by the way. In case you guys are wondering, I've been duking it out in there. I'll use a friend of mine's analogy. In regards to that, over the last few months, it feels like I've been in a dark alley blindfolded fighting 5 ninjas. So,
hey, everybody, let me add one more thing on the crypto, you guys. If you look here at a chart, this, by the way, is our an outline of our crypto strategy on Bitcoin. That sound you heard is a sound that comes up on this particular platform, where I did the basic development before it goes into the AI of how we would trade Bitcoin from the beginning of the year. So even if we had Bitcoin as of here, we are January of 2022. If you look all the way forward, we have only made a matter of 1, 2, 3, 4, 5, 6, 7, 8, 9 trades literally in 6 months. And so that is almost nothing. And if I go back to the previous months, November, December of 2021, another 2. So I've made 11 trades in literally 8-9 months. In other words, there's no money to be made. If you look here through April, this is April and May and June. We had no trades in April, no trades in May, 1 trade in June. That's it. This is a down market.
Mhm.
And in a down market with this kind of steepness, very difficult to make money. Look at the few times that we did trade. Look at these are the things where you definitely say we're dating. And this is like speed dating with the way we do it. And here's an example of a trade we made a little money, a trade where we broke even, bought it, sold it the next day, bought it, sold it 2 days later, bought it, lost a little tiny amount of money, bought it, lost a tiny money, bought it, lost a tiny amount of money. We're only in here to be able to look at trades where the market is in advancing mode. This is where we can make money. See the short-term nature of it? But even if we had crypto, everybody, we wouldn't have made any trades anyway, because the market isn't inducive to buying and selling crypto in a down market. It's just not inducive. And this is never a market, even though it's gone down so much, it's very difficult to sell it. And so
we'd be answering a different question if it was up and running. The question would be, why is it not trading more?
Yeah, exactly.
Yes. And so we look at crypto literally as a speed date. We want to own it. We want to own it from the long side, not the short side. And this is kind of, if you can see, you'll see this kind of patterns the way all of our signals work, regardless, that we're always looking at trying to buy something that we have a high expectation of going up, and sell something that we feel we have no expectation one way or the other. So unlike a buy and hold investor, where if they have no expectation, why would you hold something, especially if it bears no interest?
And I got one more little announcement, Aaron, before you cut everybody loose. I know we're at the end of our time. For those of you that are accredited, if you're an accredited investor and you are really interested in the crypto space, send me an email. We have something cooking that I think you'll like very, very much. So just send me an email. If you don't have it, it's randy@iflipinvest.com, or text me. Most of you have my cell. Text me, email me, and say, hey, Randy, what's up with I am an accredited investor. Tell me more about your crypto thing that you got going on outside the software. So just little snippet of little nuggets everywhere today, Aaron.
Yeah.
Are there any other questions, Aaron?
Yes, let's take
a couple more in.
Just a couple more questions, and let's keep it kind of tight. Martin says, Martin left, but he asked a very good question. Is stagflation now in the cards, or does the Fed really have it under control?
Oh, Martin, I wish you were still here. It's absolutely in the cards, and it's already materializing when we see the expansion of credit card debt. It means that there's no money out there to pay bills. That will harvest shortly. By the end of the year, that will harvest, especially now that M2 is finally starting to go down. That tells you that stagflation is on the horizon. It is in the cards and it is in play. As a matter of fact, I feel sadly that it might be a Trump card. Not Donald Trump either.
I gotcha. No pun intended. All right. Last question before we move on to the deal for the event. How do you feel about the real estate market in general? Just quick thoughts.
I feel the real estate market has peaked. I think it'll be slow to roll over, but I do feel that within the next 2 years, everybody should be prepared to see prices come off because of higher interest rates as much as 20%. So, but that's not true of all things. Keep in mind that I feel that is true in a lot of areas in this country. If the interest rates continue to go up, they will go down. However, everybody, rents remain extraordinarily high. And even if these prices come down in a new home, it'll put very little pressure on rents. And that's another dilemma we have. So for example, if you're building a house right now, if you're going to sell it 6 months from now, or if you own a house within the next 6 months, I think you're generally pretty safe to get basically what you paid for it, or what you want for it at current levels or marginally lower. But I think sometime over the next 2 years, going into the 2024, you might see prices down even further, which means, again, the midterm elections are not going to be able to change things like that. They're not able to change the course of interest rates directly unless they do something deeply with taxes, which we know will be vetoed. So interest rates, housing prices, I think, are due to decline, but not yet. And I also don't want to make a huge bet 2 years out.
Got it. Well,
It's
that's
just too far beyond my crystal ball.
right. That was the time frame within the scope of the question, 1 to 3 years. So thank you, Kelly. All right. So Kelly, I'm going to ask you to stop your screen share so that I can share my screen to talk about the deal that we have for all of you for this particular event. So thank you, Kelly. I'm going to share screen, and let me make sure I'm sharing the right thing here. Give me a minute. Okay. Actually, oops, I didn't do that right. Sorry. Basic. And
By the way, before Aaron finds that, I really appreciate everybody showing up on these AI circles and asking the questions that you guys ask. I feel we always keep asking questions because right now, as most of you are, you realize that a lot of your positions are in cash. It's good to have a lot of curiosity right now because there is a lot going on in the markets. I wish I could be able to say that the AI is going to make a decision shortly about getting back into the market. But right now, there's no signals I can see that allow for that. But this changes literally day by day.
yeah.
And maybe by the next AI circle, we might have different news for you. But right now, I'm appreciative of everybody showing up on these AI circle webinars. Thank you.
Thanks, Kelly. Thanks for giving me that buffer time to set up here. So we have a special bonus for everybody that has stayed till the end. I'm going to put the link to our event landing page in the chat here, both on Zoom and on YouTube. So this is the link. This is what you're seeing on my screen share right now. We have a little montage video with some of the guest speakers, Jeff Hazlett, Daryl Martin. Some of you may have heard of him in this little intro video. I'm not going to play right now. What you're going to do here is you want to come to click sign up now. You can take a look at the webpage if you'd like, but really what you're interested in is the sign up now button. And that will bring you to the order form for this event. Now, you'll see right here that one ticket for one person is just under $500, right? It's $497. However, for all of you on this, and I'm not going to post this anywhere, right? So I'm just going to say it and show it, and then no replay, right? So for all of you here, you get to have, and there's a limited supply of this. I wish Lee was here to tell me exactly how many of these codes are actually allowed. But the code event 100, EVENT 100, you apply that, you get $100 off. And that's limited time only while supplies last. I don't even know how many there is because I wasn't in charge of that. So get on it. It's $100 off. That's a screaming deal. And here's how you can make it doubly worth it. Check out, grab your deal, $397 ticket today. Enter in the raffle. If you win, we'll take care of your the 2 nights of your hotel, and you get a dinner with Kelly, which is worth way more than this.
Oh yeah.
Right? The food and the Kelly's insights and stuff is way add a zero here, and maybe now you're talking, right? Yeah, it's worth way more than this. So that's how you get the screaming best deal ever, right? You got to get a little lucky. You got to win the raffle. The dates for the events, I guess I skipped over that. Let's go back here. Great question, Debbie. It's right here on the landing page. It's October 20 to 21st. It is a Thursday and it is a Friday. I know it's in the middle of the week, but that is on purpose because part of the event, we're going to demo real professionals trading live, like 9:30 US stock market opens, futures market opens, or whatever. They're going to be trading live, like day trading, scalping. I don't really know exactly what their techniques are, but they're going to be doing it live, both Thursday and Friday. That's why it's not on a weekend. We wanted to show you real life live trading examples, right? So it is a Thursday and a Friday. I know it's in the middle of the week. So you got to make that work. And it's October 20 to 21st. Okay. Any other questions before I move off of this and wrap up for the night? Because I know I just kind of saved this for the very, very, very last minute of the AI circle. Any questions? Let me check YouTube here. No YouTube questions. Any Zoom questions? Going once, going twice? All right, I think that's it. Thanks everybody for joining us this evening. This concludes episode 3 of the AI Circle. Have a good evening and we'll see you next time.
Thanks, everybody. Have a great